Hey guys, welcome to the first live webinar of Mikey's Crypto Training Group, and today we're going to be going over the basic market structure and all the basic strategy and how I implement that myself, and then we're going to go through which steps you want to be taking and in what order, and this is going to help you guys start to really increase your gains, but then also hit more buy orders and sell orders as well. I'm going to show you guys how to use the market depth platform, as well as the go into a little bit more of where to place your buy and sell orders to make sure those orders actually hit. So just to touch on one thing, the biggest thing you want to do, number one rule, guys, is if you see coins pumping, okay, if you see coins in a positive change over here, you do not want to buy them, okay? We need to get in on the moves as the coins are in negative. And if there's no coins in negative, we're not buying, okay? Because we want to get coins as they're coming down in value to give us the best value area and then the maximum profit allowance to get to those next levels. So if we have a look at, we're on Ripple at the moment, XRP, for example. Now this is our high, okay? So we've gone up to around 2,400, and we've pulled all the way back to around 1,300. So what we want to do is, as the coin is heading up in value, I hope you guys can see my yellow cursor there. As you guys can see the price heading up in value, all of this time, okay, the coin is going to be in a positive change because it's moving up in value, okay? What that means is if you're buying as the coin has already started moving up, you've missed the move, okay? You're chasing price and you've missed the move. We don't want to chase price. We look for more opportunity on other coins. More than happy to keep an eye on that coin, but you want to look for coins in red, in negative, okay, for buying opportunities. I mean, obviously right now is not a very good time to show you guys which coins we should be buying and which ones we shouldn't be buying, because there's only 3 coins in negative. But I'll use Ripple as a case because this is one of my biggest coins that I'm going to be following for a long time. So guys, if we go through the crypto training, obviously everyone's seen why I use Poloniex. Again, the reason we want to use Poloniex is it's the current, if we go coinmarketcap.com, it's the #1 broker as far as volume is concerned, okay? Once Poloniex is no longer the largest traded volume, we may end up switching to another broker, okay? But until this time, we're going to keep trading on Poloniex because volume means volatility, and volatility means more gains, okay? That's what we want to hit. We want to hit more volatility so we get more gain, okay? So that's the #1 video in a nutshell. Now, exchange tab in Poloniex and the basics of the support and resistance and how to read the candlestick patterns, okay? Now, support and resistance is basically where price has reacted to multiple times, okay, at the same price levels. So I'll just turn off these levels here. I'll just turn off these indicators, okay? So if we zoom into a little bit closer time frame, you can see where price, so price has bounced off here, here, and here. So somewhere around this level here is a support and resistance level. It's came back to retest it here as well. So this price point right here, okay, 2279-ish, a lot of people use round psychological numbers in trading, okay? And the reason people use round psychological numbers is because people, it's in tune with our brain. If we look to buy something, we'll give an average figure of a round number, okay? So we want to look for as close to round numbers as possible as our support and resistance levels, okay? And then that's going to give us the best price bounces and so forth. So these are all highs here, okay? So if price is coming up and it resists, so it's a resistance. If price does not break that price point, that's called resistance. And support is when price is coming back down to a lower level and it bounces off a lower level line, okay? So that's the only difference between support and resistance. Guys, resistance is if a price is moving up to a point, and support is if price is coming back down to a point, okay? So you don't need to get too confused with which one's which and all that sort of thing. All you really need to look out for, if you're not really understanding it, is where price is reacting to majority of the time. Chat, is everyone seeing Mikey's screen share? Yep. Okay, cool. Yep, good stuff. Yeah, so support and resistance, guys, is that in a nutshell. Where price is reacting to a lot of the time. And you'll see here in recent events over the last couple of days, okay, we've had one big sell-off massively to the downside, which touched, what was it, 11,100. Okay, so that's a really low, a good, nice low. And then prices come back up. It's touched on this line around here again, you know, around this 1250 to 1300. It's done it again, and then we're finally moving up in price again. But if you guys look at this level here at 1500, okay, price has bounced off there 1, 2, 3 times as well. So we're in a bit of a range here at the moment where price is moving up, coming down, moving up, coming down, moving up, coming down. So if you were trading this specific market, you'd be looking for buys around this 1300 level, and then you'd be selling off at around the 1500 level. Okay, so that's support and resistance in a nutshell, guys. The only main candlestick patterns we want to look out for, and in crypto trading, we don't really do a lot with candlestick patterns because they're not as important as something like forex trading. The big ones you want to look out for are the bullish or bearish engulfings. So candles like this where prices come up to at the time it was a new high, okay, and then there's a massive sell-off. So what this means is sellers are taking control of the market, sellers are coming into the market, and they're selling past the buy orders. Okay, now this generally happens on every single move up. You'll get the Fibonacci retraces, okay, to a certain point, and then price will continue, because what happens is majority of traders in this market, in the cryptocurrency market, honestly, they don't know, they got no idea what they're doing. Okay, I guarantee you 90% of the people in the market do not know how to trade, and they don't know what they're doing. They see a coin moving, and this is evident to point number 1, why you never want to buy a coin once it's already started moving. Okay, what people will do is, I see it time and time again on my Facebook page and everything. I get people messaging me all the time, how do you get such good entries and so forth. And what they do is they'll wait till a coin starts moving up like a few percent. Like they'll say, oh, okay, cool. Let's say Litecoin or AMP. Okay, it's moved up 4%. There's gonna be a move. There's gonna be a cool move going on. So I'll jump into that one. Okay, and they base their whole strategy around that alone, without even looking at the charts, without even doing nothing. They go, okay, this coin's moving up, it's going to continue moving up. But they could be buying at the very top of a range, okay? And what happens is, if you buy at the very top of a range, this is why we never buy once a coin has already started moving. If you want to be consistent and profitable and compound your account long term, guys, okay, it's going to work sometimes. Without a doubt, it's going to work sometimes. But the problem is, if you buy at the top of a move, let's say you bought AMP at the top of this move, okay? Your capital is tied up. You haven't lost your capital because you don't lose your capital until you sell the coin. And the only reason you're going to sell the coin is if you desperately need funds. The problem is, if you buy at the top of the range and you desperately need your funds, you're going to lose. If you don't desperately need your funds, what's going to happen is you could be holding on to this coin for the next 3 weeks, 4 weeks, 5 weeks, 6 weeks, 2 months, 3 months, 6 months, waiting for price to come back up to that previous level where you've bought. And that means you become what's called a bag holder, okay? The reason why we can generate so much profit, and the training course that I've provided for you guys, is because we always buy at a negative when the coins are in negative value, okay? As price is moving down, we're always buying in the negative. Now what that allows us to do then is sell off multiple orders up to the previous high point. So let's say, I'll turn back on my Fibonacci levels, okay? And let's go out to, so Fibonacci, guys, always make sure the line, the 0%, is drawn from the bottom to the top, because we want to get the retracement. We don't want to get this thing where it's going from top to bottom, because we don't care about that. Okay, all we care about is where price goes from bottom to top. And on Poloniex, these are drawn automatically, okay? Once we get into TradingView and the advanced trading, it's much easier because you can set multiple time frames, and you can click and drag, and it's a lot easier. Okay, on Poloniex, the easiest thing to do is just change your time frames down here. 4 days, 1 week, 2 weeks. Okay, and that'll give you an overall bias of where price has come from and where price is going to. Let me just see if I'm not getting ahead of myself, because I think Fibonacci's Fibonacci's in this one, I believe. How to determine good coins. Yep. So we'll continue on with the Fibonacci. So Fibonacci is going to be your number one tool, okay, to get good value price point. And I've had a lot of questions about this, because I do use the lower time frames a lot, guys, because that's where I want to keep track of where price is going currently. Now, it's also important to keep track of where historical price has come from, okay, and gone to. Now, the reason you want to keep track of where historical price has come from and gone to, let's just say this move here, right, on AMP. Now, what you've got for like the last, if we go back a bit, where the market, even a couple of months ago, where the market kind of tanked down, okay. Now you've got a period here of around a few, a good few days of a little bit of buying and selling, a little bit of buying and selling. The price right now around here is, anywhere between 700 and, let's say 700 and 750, okay. All of these guys are buying and selling, buying and selling, buying and selling, buying and selling, okay. Now, this is at a 700 price point. All right, so the more people that buy coins at this level, okay, once the move happens and the move starts to take off, okay, as the move starts to take off, the longer a price has been at a lower value before price accelerates and moves, the bigger chance you have of a larger retrace, because you've got more people who have purchased a lot more volume of coin at that level. Okay, so let's say for instance sake this was happening, instead of for a few days, it was happening for like a week. If you got a move like this and then there was already a week of people buying and selling, this retrace, meeting will end in 10 minutes. Okay, I'm going to upgrade that, so we'll have to stop and then redo another session. The price can actually retrace a lot higher, a lot lower, sorry. It'll retrace a lot more if price has come from a lower level. And the reason is because more people, as price moves up, more people are taking profits. More people are locking in profits, they're selling their coins. Okay? Now, what we want to do to get the best value area, okay, I go over a 50% retrace is pretty good. That's our minimum value area, the 50% retrace. We don't want to get in before that, because as you can see, guys, price comes down. There's our 50% here. We've moved back up, and then we've tanked lower than the 50% because we've had a lot more volume previously. Now, 50% is the minimum value area you want to get in. So anywhere between the 50 and the 38.2, that's your okay value area. The closer you get to the 38.2 and then to the 23.6, these are the good value areas to buy, okay? And the reason these are the good value areas to buy is you can see price in here, okay? Price in here has retraced, 60 to 70%. What that means is if you're buying at this rate, 60, 70%, you've got 60 to 70% profit you can make on the way back up to the previous highs, okay? Because you got to remember, the guys that are buying right at the top here, there's going to be very few of them selling their coins off unless they desperately need the money. Otherwise, they're going to be holding the coins there, okay? And they're not going to want to sell off for nothing. They're not going to hold a coin for a month, 2 months, 3 months, and then want to get no profit at all. So unless they sell off in a loss, they're going to hold on to that coin. So between our good value area and the previous highs, we've got multiple price points in there that we can set orders at, okay? And how I structure my orders are basically, I'll do two to three orders depending on how far the price move is. So if we're down here at, say, let's say 1150, if we're down here at 1150, if we want to move up 10%, It's going to take us to what, 1275. Okay, so that's a 10% move right there. If we want to get 20%, we're going to go up another 115 points to the next level. That's 20%, and then 30% and 40% and so on. So my first orders, if I'm getting good value area all the way down here, or sometimes even lower, my first sell order is normally at least 25 to 30%. Okay, my second sell order is normally around 45, 50%, and then my third sell order is normally somewhere around the previous high, and that gives me, 60, 70, 80% return, sometimes even more. And then what I'll do is I'll separate, let's say I use round numbers. Let's say I have 1,000 coins, okay, of this AMP coin. I'll set probably 300-ish, 350 at my first take profit level, which gives me enough coins. So if price moves up, cool, I get some profits and I get some of my capital back. What I then do is I take that capital and I go and look for other coins and other buying opportunities. Okay, and that's how your account compounds so fast, because you've already bought the coins, you've already placed your sell orders. Once your sell orders get hit, go buy more coins. All right, and then once your second take profit level hits, sweet, you've got even more profit and more capital back. Go buy more coins again. Sometimes what happens is you'll hit your first and second profit levels and price will retrace back down again. And then, hey, if you're in the good value area again, buy more coins and sell at those levels again. Okay? So that is how to use the Fibonacci tool to its utmost importance. You want to use it on the you want to first use it on a larger time frame, okay? Like a 1 week, 2 week, or even a month, depending on the coin, to see where prices originally started, to see where prices originally got to, okay? And then you want to use the lower time frames then to also find good value areas of current price. So let's say we went back 2 weeks, for example. Okay, now price has already moved up here, and price has already retraced. Okay, so this move right here down to this price point here, that's about a 50% retrace. Okay, and unfortunately on Poloniex you can't just draw the line from previous low to the previous high. Okay, that's what we're going to do in TradingView. But if you see a rough move like this has already had a bit of a retrace. So this area here is now where we want to be looking. So if we go back down to say a week time frame, this is our major move now. Okay, so in this good value area, we've come down into that very good value area, and that would have been a very good buy. And that was May 22nd. That was yesterday. Not even that long ago. 30 minutes. What? 1 hour, 2 hours, 3 hours, 4 hours. Probably about 12 hours. Something around there ago. That would have been a really good buy area because we've got our fib down around that level. And how we use the Bollinger Bands with the Fibonacci level is, all we want to do is concentrate on the lower band, okay, guys? As price is coming down to our very good value areas, okay, the Bollinger Band acts as basically an additional confluence factor. So you don't take a trade just based upon the Bollinger Band hitting price or anything like that. It's an additional piece of confluence that gets added to your trade that means it's a better trade. Okay, so don't use any of these tools just strictly on their own. You still have to gauge where prices come from and gone to. You still have to check to make sure you're in the good Fibonacci levels. And then with the Bollinger Band, if it's hitting on this bottom line around a good value area, that's a better buy than, say, if it wasn't hidden on the hidden on the band. Okay. Now the band expands and contracts depending on how far price moves. Okay, so don't take trades just based upon the Bollinger Band. It's used as an additional tool for extra confluence factor. Okay. Remaining time 3 minutes. What else are we into? How to determine which coins are good and bad. Okay. So if we come back over to coin market cap, this is how I determine my coin list, guys. Okay. So my level of importance is from the market cap of the coin. So your coins are going to adjust on the fly daily or weekly or whatever, you know what I mean? They're going to adjust quite a bit, because as a coin pumps and as a coin dumps back down again, it's going to change the market cap fluctuation rapidly. So, you know, the top 10 coins, for example, they don't move, they don't change a hell of a lot. These bottom coins down here, you know, between the top 20 and the top 100, these are going to be moving around a lot, because as coins are moving up and moving down, some of the coins are going to increase value 100% in one day. Okay, so let's say this coin increased 100% in one day. It's going to go up to, you know, it's a rank 47 coin. It's going to go up to 64 million market cap, which would then place it, you know, a much higher coin. It would place it 13 positions higher in your market cap. So automatically, you're going to be looking through your coin list, and then you know, you're going to have a coin which was, you know, almost at the bottom of your list. Now it's almost at the middle of your list or something like that. So the level of importance is mainly for the top coins, guys, okay? And these are the coins you want to be using majority of your funds in, because these coins can still move 10, 20, 30, 50% a day, okay? And they've got the market cap to back it up. So they've got the volatility. So a lot of the time you'll be holding these orders a lot less, and you're going to be able to compound your account much faster. Okay, because you're buying and selling more orders, you're turning over more profit, you're continually finding more trades, and you're turning over your profit levels. The lower level coins are obviously going to return a much larger percentage. Okay, so when I say much larger percentage, let's say one of the low coins is Doggy Coin. Okay. It's trading at 143 at the moment, right? For it to move 100%, it only has to move 143 points, which doesn't sound like a lot, but obviously it depends on market volume and so forth. But the potential for this coin to move huge is another one. We saw DGB go from like 100 to 1,000, so it increased 10 times. Okay, it increased 1,000% in the matter of, you know, 3 days. Now, getting back to this market cap part, so the reason you want to trade these volume coins, guys, with the larger market cap is because they're going to turn over more often. They're constantly moving up and down in value more often than not. Okay, if we look at DGB, for example, we went from, now I actually got in around about this level at 108 just before the move happened, and it wasn't, I got in at this level based upon a small pullback. It had nothing to do with me knowing that this huge move was going to take off. It just did, which was great. But if you look back previously, right, you know, between April, you know, this is the line down here where price has moved and gone to. You can see for months, screen share is off. Hang on, sorry guys. Screen share screen. Okay. Thank you. Okay, so I'll just go over that again. Now, I got in at DGB right down here at 108ish, okay, and price took off. Now there was nothing to tell me that price was going to take off, but I've got a lot of capital in my account, and I saw other coins pumping and going massively in value. They did release something about the reason why price took off so much is because they released some news about that Minecraft game and how they're going to be using their coin with Minecraft and so forth in the next 25 days or something like that. Okay, that's why the news has taken off massively, and they're obviously working with other gaming companies. They're trying to get League of Legends and World of Warcraft and things like that involved. So I used to play games many, you know, ages ago, and I know a lot about the gaming industry, so that interested me, so I thought I'll grab some coins. So it's not always about news events as they happen, guys. If you've got the knowledge of a coin, or if you're following a coin, or if you like how the coin technology is and you can see value in it, if you get it in a very low value, it's going to be beneficial as well. So the problem is before that, right, we've got weeks and weeks and weeks where price was bouncing between, you know, its high points were like 40 and 20. So even though this looks like a lot of movement, it's actually, you know, it's still, you know, between 20 and 40, it's still 100%. But this is taking weeks and weeks to go from a low, you know, to a high. It's taking weeks, and then it comes back down, and then it takes weeks and weeks and weeks to get back up again. So that's the difference between trading large market cap volume coins and low market cap volume coins. And you can basically trade based upon this volume as well. So this volume does play a little bit of impact, but not much, because this volume is obviously the last 24 hours. So what you'll find is once a coin gets pumped, obviously there's going to be massive volume in the last 24 hours. So DGB, for example, prior to this, you know, it might have had a volume of like, volume of like 100 Bitcoin. So you want to trade the higher volume coins more often, and the way you find the higher volume coins is via the market cap. Okay, so the market cap plays our major role in finding which coins we want to do. So again, guys, to find your list, create your list, go through, and if a coin moves 1 or 2 positions, it's not really going to make a huge difference. But how I generally split up my my account is I'll probably use at least 50 to 60% capital in these top 20 coins, and then I'll use probably about 20-25% capital in the lower coins. And because I've got my capital and I've grown my capital to the point where I've got a lot of coins, it's not as bad for me to wait weeks on end for one coin to pump and give me massive profit, because I've already set my sell orders, I've already started generating profits, I've already started returning my capital, and I've already started expanding into other coins. Okay, so once you guys start to do that, and it's going to take a couple of weeks to do that, guys. Okay, might take a few weeks to do that. Once that starts to happen for you, you're going to see your account growth go massive, because what it means is you've got more capital and more coins, which means you've got more coins and more potential for more movements. Okay, to capture more movements. So you'll see me posting in the group almost daily, and you'll see different coins being hit every day. Okay, and what that allows me to do is once those coins get hit, that's got me more capital. I can roll that into other coins again, or look for more buy orders on the same coins if they return back to a good volume area, good value area. Sorry. So that's how we choose our best coins. Okay. We're going to go over how buy and sell orders work, an explanation of the Poloniex fees, okay, and how to determine the price points to buy and sell. Okay, so this is very basic. I'm not going to touch on this too much, guys, because how to place your orders is you basically, whatever price point you want to buy at, you say, okay, I want to buy 0.1 Bitcoin worth. I want to sell 0.1 Bitcoin worth, or I want to put a buy order in. Let's say 0.1 Bitcoin. I hit my buy button, and it puts my it puts my buy order in at whatever price that I put it in. So that's basically buy and sell orders. The biggest thing you want to do with buy and sell orders is where to place your buy and sell orders to get good value. So first of all, guys, let's say on this chart, for example, first of all, we want to see where price is going. We want to look at our fib levels to see where good value price is. So on this coin, for example, we're looking at anywhere below 550-ish for a minimum entry, down to about 450-ish and below for good entries. So the fastest way to find this out is with the market depth. Okay, now with the market depth, you can hold your mouse over here, and it shows you the price, and it shows you the sum in Bitcoin. Now when you get big parts like this that do a massive spike, Okay, that means that's a buy or a sell. You know, that obviously this is a sell, so this is a sell wall. Okay, whereas this one over here, this is a buy wall. So the price between, say, 337 is 520 Bitcoin, for example, and then to move 3 or 4 points, you know, it goes up 30, 40 Bitcoin. So what you want to do is, if you find that that's a good buy value area, you want to put your price just before that buy wall. So if we scroll down to, there's a little buy wall here at around about our 550 level that I was talking about. So you can scroll down, use the market cap indicator to find it first, and you'll see here, guys, smack on 550, and then also just below that at 541, you got a 27 Bitcoin buy wall and a 32 coin buy wall. Okay, so what you would do is, if this price is within a good range for you, what you want to do is you want to put your buy order just above that price. Okay, so we'd go 551. We go 551, and we go, you know, put our 0.1 Bitcoin or our 1 Bitcoin or half a Bitcoin, whatever you want to spend on that coin. Okay, and then we place our buy order. All right, and that would put our order just above there. So what happens is, these buy walls act as dynamic support and resistance levels. Okay, and when I say dynamic, is because these buy and sell walls can obviously move because these are people's orders. So if they've got an order in, they can come down here and cancel their order at any time, and the wall's gone. Okay, so when you're looking at price to buy good value orders, though, you want to put yours just above, just one little point above. And what that means is, if people at this level here, if they just go, no, this is a good profit level for me, I just want to offload all my coins, I want to smash my coins, I want to sell them off at whatever value, you know, I can get. What they'll do is, if they've got a large amount of coins, okay, they'll sell into the buy orders, and the buy orders are dropping. Now, if you were to put your buy order just below this wall, it means 27 Bitcoin of that coin needs to be sold before it hits your order, which is a lot on this coin. Okay, whereas if we've got it just above, okay, it means your order gets filled and you're not missing any value. Okay, because the difference between that one little price point is nothing, but the difference between that price point is your order getting hit 90% of the time, or your order not getting hit at all. Okay, so that's how I compound and I turn over my accounts so fast, is because when I'm looking at good value areas, I'm monitoring where the buy walls are, for example, and I'm putting my orders just above that price. So what I would do also is, I would have one buy order here. Let's say this is a good price, good value area. I'd have one buy order there, and then that's my first buy order. Okay, and again, I use probably 30 to 35% of my capital that I'm going to buy that coin with. So let's say, round figures, I'm going to spend 1 Bitcoin on buy orders. Okay, on my first buy order, which is still at a good value, I'm going to put probably about 0.3 to 3.5 Bitcoin on that order, okay? And then I'm going to go down to the next level, okay? And I'm going to find a better value area below that. Now, obviously, the difference in price between 550 and 541 is barely anything at all, so who cares about putting another buy order here? I'd keep scrolling until I get to the next decent buy level, you know, at the next price down, which at this rate is down at, hey, guess what, 500, another round psychological number. So I'd come back down to 500, I'd look at these orders, and I'd say, okay, there's a 31 Bitcoin buy wall, I'm going to put my order, and just above it, obviously, someone else has done the same thing, and then just above that, someone else has done the same thing. So I'd place my buy order at about 503. Okay, again, 3 price points is going to be nothing, guys. Okay, and then I would put another 0.3 to 0.35 Bitcoin at that level, and then I'll normally have a minimum of 2 buy orders, and the reason I have a minimum of 2 buy orders, and I do separate them by a decent amount, is because if price just keeps coming down, guys, what's going to happen is if you have all of your Bitcoin at that first buy order level, right? What's going to happen is you're then locked in at that price. So if price keeps going lower and lower, let's say you buy it at that 550-ish level. If price then drops down to 300, okay, you have to wait for price to come from 300 back above 550 to get any profit at all. So what I'll do is I'll be happy with, hey, if price comes down and hits my first buy order, fantastic, great. If it hits my first buy order and price takes off, awesome, even better, because I've already bought that coin at its best possible value because price has come down, hit it, and taken off again. If price hits my buy order and continues to drop, massively, hopefully it gets to my next buy order, and then if it hits my next buy order, what it does is it brings my average, it squeezes my average. So let's say I bought at 550, and then let's say I bought at 450, for example. My break-even average price then is 500. Okay, so anything above 500 is profit. So even if I sold the coins that I bought at 550 back off at 550, I'm still making profit on the coins at 450. Okay. If you need to offload them, it brings your average a lot lower. This is why I normally use at least bare minimum 2 buy orders, unless price is very far away and I'm waiting for, let's say price was at a new all-time high, and I went, okay, I'm just gonna set a buy order down at the 38.2 fib. I'm gonna set a buy order there. I'll set one buy order, then as price is coming down, I'll keep an eye on my open orders and see where price is reacting and where price is moving to. And then as price gets closer to my order, then I'll add another order below it. Because if price is already at its high and I'm waiting for price to come back down so far, you don't want to have all your capital tied up in buy orders, on a coin that may take days or a week or something to come back down. So you want to have at least, obviously you want to have your bare minimum 1 if price is way far away. And when price starts to come down, if you're looking for a good value area, I have bare minimum 2, and I generally have 3. So on my third buy order, I'll generally have it, again, another 10, 20, 30% below that. I'll look for the next buy order wall below that, and then if I get a good value area, if price gets to that point again, bang. I'll use, as price gets lower and lower, on my third order, I would use a little bit less capital. I'd probably put it on, 0.2 or 0.25 Bitcoin. And the reason being is as price gets cheaper, to bring your average, you're going to actually buy, because price is cheaper, you're going to get more coins for your Bitcoin. So, at 0.25 Bitcoin at a lower price is going to end up being roughly around about the same amount of coins as if you were to say use 0.35 Bitcoin at the first order. So what that does overall is it gives you a squeeze on price, okay? And then the more buy orders that get filled, the lower your average becomes to offload the coins to make more profits. So that's how I use buy and sell orders greatly. Now, sorry, that was buy orders. To do the sell orders, it's basically exactly the same thing, guys. As I was saying before, I'm normally happy, anywhere between 10 to 30% on your first order is fine, and it all depends on how much prices come back down. If prices come back down right down to the 23.6 fib, I'll normally set my first order about 30ish%, and that's exactly what I did on Zcash. Okay, Zcash I got right at the bottom move, so I'll show you guys Zcash. Now, I got price for this move. 5 minutes. Posted this one in the group. 6 hours. This is exactly why I use TradingView. I got price. Where was it? It was actually lower than this. It was at this 478 and 482. Okay, so I got it right at the bottom of the move, and Samuel can vouch for this one because I was talking to him about it at the time. So I had my first sell order was it was up around here somewhere, 5.4 something or other. Okay, it was like 30%, and then my next sell order was about 50-60% profit, and then I had another sell order at the top which was about 80%. Okay, so overall on my Bitcoin I made an average of about a 50-60% gain in whatever Bitcoin I spent. Okay, because I took some capital off at the first level and then I went and bought other coins. Okay, next order got hit, more capital, more profits. Last order got hit, bang, big profits. Okay, now the reason why I stagger it like this is because obviously if price is going to go back to its previous high, that's going to give us the most percentage, the biggest gain that we can get. Okay, but you don't want to buy price way down to the low and set all of your coins at a previous all-time high or a previous high, because what's going to happen is, guys, you could be sitting on that again for days or weeks, and the problem is, as you've got capital tied up, capital being tied up is not giving you profits. Okay, the profits only come when your orders get hit, so you need to understand that profits only come when orders get hit. If price came up and was mucking around here for like 3-4 weeks, okay, and didn't hit your high where you had all of your coins set because you were trying to be greedy, over that 3-4 week period, you probably could have bought, you know, another 5-10 times, 20 times on different coins and hit 10-30% profits on each one of your first sell orders, and rolling over profits and compounding your account. That's how you compound your account extremely fast. Okay, so take advantage of those multiple orders. And again, guys, the market depth thing is pretty good. You can scroll over here and you can see where price jumps a lot in value. Like, you know, once price gets up to this point, between 161, what's going on here? Between 161 and almost 2, so you know, large, you know, 25%ish, you've only got a couple of hundred Bitcoin there, and then between this price point here and to go like, you know, 3 or 4%, you've got 1,000 Bitcoin to go 3 or 4%. So these are where I set my take profit levels. Where when I find a rough percentage I'm happy with, I'll find out where previous support and resistance levels are. So let's say we bought down here, you know, you'd want to be taking profit around these levels where price bounces off multiple times and where price comes back down to, because there's a good chance that price is going to hit that point again. So here, 1, 2, 3, and we hit 4 times. Now if we come over here, as we've come down past that point into our good value area, we've come back up, bang, there's the first hit. We've hit our price point. And then my second take profit level will be at the next, you know, resistance level, which will be around about this point. There's 1, 2, you know, 3, 4. There's about 10 times price has reacted to this level. Bang, it hit it here again. That's your second take profit level. And then the third take profit level is the next support and resistance level again. Sorry, next resistance level again. Okay? So that's how I stagger my sell orders, because price reacts to those points a lot. And then the more people that come on board with cryptocurrency trading, a few months ago or even like 6 months ago, there was very little technical analysis involved with cryptocurrency trading, because everyone that was trading cryptocurrency, they hadn't come from a Forex background or anything like that. As more and more Forex traders are coming into cryptocurrency trading, more and more technical analysis is being used. And also, as coins start to develop technical analysis patterns, those price points react accordingly, because more and more people are seeing the same thing in the same value areas, the same price points. So once you get in tune with majority of the other traders, which is what we're learning, once you get in tune with the majority of the other professional traders, you're going to hit a lot more buy orders and a lot more sell orders, and you're going to turn over your account a lot faster. Okay, so the goal is to be on the side of the professional traders and not just the people looking at price and going, oh cool, this coin's moved up 20%, I'm going to jump on the bandwagon and hope that it moves up more, and then become a bag holder at the top, and all your capital's tied up and you can't do anything and you're frustrated because you're not making any money, you're not making any profits, because you just bought at the top and you're just sitting there waiting. Okay, waiting. All right, so that is buy and sell orders overall, guys. That's how you do your buy and sell orders. Now, that's how to determine the prices as well. Best times to buy and sell and when to avoid buying and selling. Best times to buy and sell are obviously, the best time to buy is after the market pulls back. Okay, the worst time to buy is as the market is moving up. So never buy when the market is moving up. Always buy when the market is coming down. Those are the number one things that are going to make you money. Okay, even if you did nothing else, even if you did absolutely nothing else, you didn't worry about the Fibonacci's, you didn't worry about the Bollinger Bands, you didn't worry about any other technical analysis or anything. If all you did was wait for price to come back down a certain amount or a large jump, and then you bought again, there's a high chance that you're still going to be profitable. Okay, it's as simple as that. The more times you buy as price is already moving up, the less money you're going to make, because it means that the move has already started. The move's already started, and with cryptocurrency, once the move starts, like, these are big percentages. Like, guys, once a coin moves 25%, like, think about it. If you're buying after the price has moved 25%, someone else has already made 25% profit. Okay, the people who have bought before the price has started moving have made even more than 25% profit, because they've bought when the price is in a negative and when it's even gone down further. So keep in mind, this is a 24-hour average. This is a 24-hour average, guys. Okay, so just because a coin is just because a coin's in negative doesn't mean it's in a good buy value area. That's when you find the negative coins and you go and look at them and you see where price is going to come down to. So with Ethereum, for example, I mean, we had some massive moves on Ethereum recently. You know, we had new all-time highs up to around the 8.5 level. Now, price has already pulled back right there, bang, 50% level. Okay, on a larger time frame, it's only the 618 level. Okay, so you can see how using a larger time frame to see where price has actually moved from and to helps as well. So keep in mind, guys, this is a pretty nice low, but this is only May 17th, so this is only 5 or 6 days ago. Okay, so price has moved this far in 5 or 6 days. Okay, that's not a very long time. So we're expecting price to come back down to our good buy value areas. Okay, at least the 50 minimum on your 1 week or 2 week period. Okay, at least the 50. Like, if you bought Ethereum now, that is not a good buy. The only if you were just to buy coins and you're going to say, okay, I'm going to hold it for like 2 years or 3 years or whatever, something like Ethereum or Bitcoin or something like that, it's actually not, it's not really a bad thing to buy a coin at any level if you're going to hold it for that amount of time. But we don't want to do that, guys. We want to make profits. We want to make profits every day if we can. We want to make profits every couple of days if we can. You know what I mean? So instead of using your capital here and waiting for price to move, if you bought here, right, at the 7 level, Like the maximum benefit you're going to get before the previous high is 20%, which is nothing. 20% in crypto is not much at all. Okay, that's what we're targeting for our first sell level, let alone our maximum sell level. Okay, so we need price to come back down a lot further so we can get multiple sell levels and compound and roll over our accounts. I can't emphasize that enough, guys. That is the number one priority. Good value area, multiple sell levels on the way up, rolling over capital, more buy orders, and just keep turning over the coin. That's how I've turned my account from, like, what's today? It's April. I took that screenshot. April the 20th, okay? April the 20th. What are we? 1, 2, 4, 3, 4, 5. I'm not even 5 weeks in, guys. Okay, I'm not even 5 weeks in. I've gone from 14.2 Bitcoin. And I've withdrawn 1 Bitcoin. I showed that withdraw in my video. Okay, so I'm almost at 35 Bitcoin from 14.2 in less than 5 weeks, guys. And it's because of this strategy. Buying coins, hitting sell orders on the way up, rolling over profits, buying more coins. The more coins you have, the more capital you get, the more you can compound and the more you can speed things up. Okay. Obviously, with Bitcoin price increasing as well, my account back then showed its estimated holding value of like, I think it was 17,300 or something like that. So, that's huge. That's massive. Well, what's that? About 56k capital gain in less than 5 weeks. Okay, and that's US. So for me being an Aussie, add about 30% to that, and that's your Australian dollar. 1 Bitcoin at the moment is about 3,100 or 3,200 Australian dollars. Okay, so this for me is really, it's about 100k or more at that rate. So I've gone from about, I've tripled my value because of rolling over and buying more coins. So that is the number one thing that I want people to do. I want people to buy at good value and sell on the way up, sell orders on the way up. Okay. Where are we at now? So that's the best times to buy and sell. Okay, how to use stop limits to lock in profits. Now I'll show you guys the perfect thing for this. Okay, so let's say ZEC, Zcash, for example, and you're only going to be able to really use the stop limit to lock in profits when you're on the computer, okay, or at least can check your orders. Because what you want to do is, if you're approaching, let's say this massive high here, okay, let's say we're approaching a new all-time high, all right, and price is moving up. No one knows where price is going to turn around. Okay, once it approaches a new all-time high, no one knows. No one knows where price is going to go to or when price is going to turn around. So to get the maximum benefit out of your all-time high, and this is why I emphasize on keeping some coins, a small amount of coins at least, for new all-time highs. So I normally set 2 or 3 sell orders on the way up, and I'll keep anywhere between 10 and 20%. Sometimes more, depending on how quickly price has moved up or hit my levels. Okay, if I'm on the computer at the time, sometimes I'll cancel orders and I'll keep more coins for all-time highs. But always keep a little bit of coin for new highs, guys. Okay, and the reason being is once it breaks to a new all-time high, you don't know where price is going to go. So instead of getting your 50, 60, 70, 80% at your previous high, you might be able to get 100, 200, 300, 400%. Okay, DGB, what classic example. Okay, I bought at 108. I sold coins at 900 and something. Okay, so I made 9 times my return because I was selling on the way up. I was selling at the new all-time highs. The best way to use the stop limit is once prices go into a new all-time high, you lock in profit by following the buy and the sell orders as price is moving up, as buy orders, as price is moving up. More and more buy orders are going to come up, up, and up, and up. Okay, so let's say we start to go to a new high now. We'd see buy orders going 138, 139, 140, 141, 142, 143, etc. Okay. How you want to use the stop limit is slightly different to when we're placing our buy orders. You want to protect your order. What's this doing? You want to protect your order, okay? Where is it? Sorry, guys. When you're setting your sell limits, okay, you want to protect your buy orders. So let's say we're up to 1.4, okay? Let's say we're up to 1.4, and okay, there's a buy wall right here. Okay, so let's say we're up to 1.4, 1.5, 1.6, whatever. And you go, okay, cool, price has moved up 100, 200%. I want to lock in my profits at least as close to possible as I can to the highest value. So stop limit, what the stop limit means is once price hits that point, it activates your order. And limit is what your order is going to get activated as price. So let's say we put a stop in at, okay, let's say we're at 1.389. Let's say if price falls down to 1.38, I want my order to activate. So we'd go 0.138, okay? If we wanted to go 1.38 flat, for example, and at 1.38, there's a buy wall. So you want to set your stop limit at a buy wall. And the reason you want to do that is because once price gets to that point, it then activates your order, okay? And if price quickly tanks past that point, like if price just drops 5, 10, 15% and it gets past what you put as your limit is not going to come into effect, guys, because price has already moved past your limit point. So again, you want to put your stop either on or just above a big wall, okay? And then you want to put your limit just below the next big wall. So in this case, let's say we've got there's a wall at 139999999. So we'd say, okay, I want my stop limit to 1319999, and then I want my limit. Okay, so let's say you're happy with 1.385. There's a massive wall there. Now what we want to do is, again, we want to put our order either on that same order or just below it. Because what happens is we're then protected by that big buy wall move. So unless someone sold like 300, 400, 500 Bitcoin worth of orders, our order is going to get placed and it's going to get hit. Okay, and then that's how we lock in maximum profits. If you're a lot of you guys are still at work and still either studying or school or whatever, if you're not, the stop limit is not a big crucial thing. Okay, guys, you don't have to be on your computer all the time. Okay, I'm not on my computer all the time. I log in once or twice a day and I check some coins and that's it. Okay, I set my orders and that's how I get my profits. So my actual chart time and me actually checking the coins, realistically, it's about 30 minutes to an hour a day maximum. Okay. Sometimes if I'm not doing anything and I have a quiet day, I'll sit down and I'll go through, I'll go through a lot more coins, or I'll check what news is coming up, or if there's any news coming up and so forth. But majority of what you need to do is this basic course function, okay? And it's buying and selling orders, and you don't have to use a stop limit. If you want to set your coins to a new all-time high, which you're going to be happy with, add an extra 20, 30, 40% on top of your previous high. If your order gets hit, great. If it doesn't, well then too bad. You've still got coins for the next high. Now, the next thing I want to go over is really important because it's not something I've added into the course, but it's a psychological aspect. Okay, continue going. Now, the last thing I want to recap over, guys, is how to use your market, the Twitter and stuff for news events. Okay, now you'll see I'm just trying to find it. I'll just try and find it while these other guys are joining, because I had a perfect instance where news was extremely relevant. Okay, so news is important, but the thing you've got to remember about news, guys, is if a good news event comes out, okay, that's what's going to push price faster to your sell orders. Okay, you're not going to be able to see news and then go, oh, I'm going to quickly jump in a coin because I just saw some news, because by that time the news is already released and the coin will already be on the rise. Okay, unless you snag it and grab it at exactly the right moment, unless you just browse past this news, or you're on Twitter and it pops up in front of your face or something, and then you quickly jump on the charts and you buy coins right then and there, you're not going to be able to catch the news event. But that doesn't matter, because what's going to happen is we're waiting for price to return before we're buying value areas. And then the only thing news is going to do is, if news comes out and it's good for our coin, fantastic. That's gonna crank to our sell orders much faster. Okay. Now, news can obviously work against us as well. If something bad happens with a coin, okay, you need to be able to see that as well. Now, where was this? I posted it up the other day because what happened was, I think it was Steam Coin or something. I posted it up the other day in the group. Was it in the paid group or was it in the free group? Yeah, paid group. Okay. Now, I saw, okay, and when this is something to keep an eye on, guys. Okay, this is when news is the most important to check. Okay, if you see a coin drop so dramatically in price in a very short period of time, which goes past your normal good buy value areas, okay, you know, we went from 27,000 down to like 10,000. Now that is a huge drop. Okay, that is a massive drop. And the reason this happened, okay, it was on May the 11th, I believe. So we've gone from new all-time highs basically down to the lows again, where we were like weeks and months ago, okay? Because I saw this, and when you see drastic things like this where price just absolutely plummets and it just goes crazy, okay? Always check a news event. Because what I did, I went, something's not right there. So I jumped on Twitter, okay, and I searched for the Nort coin. Now, when you're on Twitter, obviously you want to use the full name. You don't want to use the acronyms. A lot of the time, don't bring up the coin. So if we go Nautilus, and it's already come up because I'm following it. Okay, so if I went to the Nautilus page, I want to see what's happened. I want to see if something has impacted the price to drop so far. And obviously, this is an extremely sad circumstance, guys, because one of the key employees passed away, and they're saying, because the employees passed away, the project is halted, which basically means no further development on the coin. So straight away, who wants to buy a coin that isn't being worked on? Who wants to buy a coin that is basically, you don't know when it's going to continue. You don't know when the project's going to continue or anything like that. So this is the only time, guys. So I saved capital by not buying this coin because I looked at the drop. I went, something's not right there. I went and checked the news on it, okay, and then that's why I didn't buy the coin. If there was no news about anything negative or anything bad, that would have been a perfect buy, because the potential from where it came from with the high to the low was massive, okay? But obviously in this circumstance, it's not a good opportunity to buy because the project's been halted. Now, these are the only times that you're going to experience if you're going to experience loss, if you follow the training guys in times like this, if you had Nautilus coin, okay, what you would want to do with Nautilus coin, there's no point holding on to that coin, guys. You want to get rid of that coin as quickly as you can, okay? Because what happens is, as the price drops, everyone else starts looking at the news as well that know about it, and the people that know to look at the news and know what's happened, or even in the troll box, sometimes people will type up. I mean, I would take the troll box with a very, very small grain of salt, but sometimes they post up news articles or something in there, okay? But because price dropped so drastically, we checked the news, and if you had Nautilus coin, you want to offload them as quickly as you can, even if you're in a loss, okay? Because what's going to happen is the longer you hold on to this coin, the worse it's going to get. You would have seen the same thing if you guys were on Poloniex when all the last lot of coins got delisted. Okay, it was before this point. Let me have a quick look. I think it was around April the 2nd or something like that. April the 2nd they announced it, and then May the 2nd they removed the coins. So all of these coins got delisted from Poloniex, okay? And the reason they got delisted, guys, was because numerous reasons. The coin's either not being developed, it's not being updated, the development team are not updating people with what's happening, the coin's been abandoned, the website's gone down, you know, any of those reasons are basically they clear up their platform, they stop people buying crappy coins that are worth nothing, and they get rid of it. Now, the problem is, if you're holding any of those coins, if you saw these coins, they dropped in value like Nautilus coin, and even worse, they dropped completely. They just went completely down. And then you get these, and then it's important to also understand that, and then not buy back into those coins when you're looking for coins to buy. So the news stuff is really only the news stuff is relevant more so, I guess, when you're starting out to roll over those first few coins, because you want to make sure that those coins are obviously in your top list of your market cap. You want to make sure that those coins are being updated by the devs and so forth, for example. So if we have a look on any of these coins, if we have a look on Ripple, for example, if we have a look on Ripple, okay, you'll see a lot of activity, okay, on their page. 14 hours ago there's a tweet, 20 hours ago there's a tweet, 16 hours ago, you know, there's tweets all over the place. So they're extremely active because they're a huge market cap coin, okay? So the lower the market cap coin, generally the less the less amount of activity. Let's have a look at, you know, how I was talking about Dogecoin before, okay? Dogecoin is one of the cheapest coins on Poloniex at the moment, and May 20th they did a tweet, May 17th they did a tweet. The last tweet before that was a month. Okay, so there's a month between someone posting from the Dogecoin team to your followers. Like, imagine if imagine if a network marketer, for example, imagine if I was promoting a new program and I promoted it once and then I didn't promote it again for another month. Like, it's not relevant at all. You know what I mean? So the more people are posting and stuff, the more other people looked at that as well. So the higher the market cap, probably you'll see a lot more activity. Or if a coin's recently pumped and so forth, you'll see people obviously tweeting about it. The developers will get all happy about that sort of thing. But generally, the lower market cap coins and so forth are going to have less activity on them. That's why they're taking longer to turn over your profit margins. So what I'm saying here, guys, is don't put all of your capital in, say, a top 10. And don't put all of your capital in all these really low price coins, because the low priced coins, okay, generally move more, as in a higher percentage their move will be, but they don't move as much. So you need to weigh up between the volatility, which is the volume, okay, which brings the volume, and then you need to weigh up the percentage move as well, okay. So I mean that's realistically an overview of the beginner course.